Jane bought 10,000 units in a unit trust on 1 July in tax year 1 for $5 each. During tax year 2, the trustee made non-assessable payments totalling $1 per unit. At the end of tax year 2, Jane's cost base and reduced cost base of $5 for each unit must be reduced by $1, giving a new cost base of $4 per unit. Jane subsequently sold the units in tax year 3 for $6 each, which triggers CGT Event E4. As the capital proceeds are more than the cost base of $4 per unit, Jane makes a capital gain equal to the difference, being $2 per unit. If the non-assessable payments made to Jane during tax year 2 had actually totalled $8, then Jane would have made a capital gain of $3 in that tax year. Further, Jane's cost base and reduced cost base for the units would be reduced to 0. If Jane subsequently sold the units in tax year 3 for $2 each, the capital proceeds would be more than the nil cost base, and she would make a capital gain of $2 per unit in that tax year. There are a range of CGT events relating to trusts. Some events relate to the treatment of capital gains within the trust, while others relate to the tax treatment in the hands of the beneficiary. CGT Event E4 captures the situation where the trustee makes a non-assessable payment to a beneficiary in respect of their trust interests. Note that CGT Event E4 does not apply to interests that are pre-CGT assets, as well as certain types of payments. An interest in a trust refers to an investment or holding of trust units, for example. However, CGT Event E4 cannot happen to a discretionary beneficiary because they have no interest in the trust estate, only a mere expectancy. Payments can include amounts paid now or at a future date, as well as the giving of property. But CGT Event E4 only captures non-assessable payments, such as tax-deferred amounts arising from the excess of trust income over trust net income and capital works deductions. The non-assessable amount is first subtracted from the cost base and reduced cost base of the beneficiary's trust interest. If the non-assessable amount is less than the cost base and reduced cost base, then the only outcome is a reduction in the cost bases by that payment amount. However, if the non-assessable amount is equal to or greater than the cost bases, then the cost bases are reduced to 0, and any surplus is a capital gain. Any subsequent sale of the interest would likely trigger CGT Event E4, and the resulting capital gain or capital loss would be calculated by comparing the capital proceeds from the sale to the new cost base or reduced cost base. To recap, CGT Event E4 captures the situation where the trustee makes certain non-assessable payments to beneficiaries in respect of their fixed trust interests. The payments reduce the cost base of the interests, and if the payments exceed the cost base, then a capital gain may result.